just when we were getting used to the idea that bad news means good news for the market and good news means bad news for the market, well, that all changed today. So this is Randy Kirk. We're going to be talking about the market, and we're going to be talking about Tesla's place in the market and why Tesla was down 7 more points today, 4%. And if this is content that's useful to you, please like it so that I know to make more content like this, and also subscribe and notify if you'd like to get more of the same. We have a great lineup the rest of this week. We'll be talking about some of the other divisions, specifically of Tesla. I'm going to note those in the information below so that you can see what subject matters are coming up. I got a really big one I'll talk to you about in a minute. All right, so this good news, bad news thing, not so much anymore, okay? I thought we wanted the economy to cool off, and then if the economy cools off, the Fed will pivot, and if the Fed pivots, then interest rates will come down, and then people will be able to buy more cars and et cetera, and houses and all the rest, and that would be good. So we needed some kind of a soft landing so that we could take off from that and have another 6, 7, 8, 10 years of bull market and of a good economy. That's been the theory all along, right? Well, okay, today we got what we should have wanted. We got a softer jobs number that followed another number we'll talk about in a second from yesterday. And according to all the pundits, that's why the market was down today, or this NASDAQ was down today, even though the Dow was up slightly, mostly because the banks were responding well. So if the NASDAQ was down on a day when the information that we got was negative about the economy, do we need to take a new look at what to expect going forward with the bad news, good news stuff? It's starting to get a little confusing. And also confusing is this entire bond market situation. So let's go through this one at a time. All right, so today the ADP jobs results came out, and it was way softer than what the street was expecting. Now the ADP jobs report is not nearly as watched or critical, or people normally don't seem to be as concerned about it as they do with the jobs report that's coming out on Friday, which is the federal jobs report. And but this is maybe a precursor. They're like, okay, it's going to be a crisis on Friday when that jobs report comes out. Well, it wasn't that horrible today. It was just off of what the street was expecting. And that followed up on a report yesterday that said that for the first time in a very long time, actually in a year, the number of jobs available dropped below 10 million. Well, now the top ever in history was 12 million, which was a few weeks ago. It's dropped just barely below 10 million now, and normal for right now should be about 5 million. And if you really want to head towards a recession, it should be like around 4 million. I'm sorry, but these are not the kind of numbers that I would take as, oh my gosh, we're going for a hard landing. It still means that there's about 6 or 7 jobs available for every person that is seriously looking for work right now. So maybe we will have really bad numbers on Friday, and maybe this is a precursor, but there you go. That's my take. All right. The 10-year bond yield has been down. It's now down to 3.3%, and that is the lowest since September of last year. And then growth risk equities went down too. Now, again, you would expect the opposite. So as bonds go down, which means interest rates are going down, then that means that the growth risk equities can borrow money more cheaply, and that people can buy their products without having to pay these high interest rates, and that those should be good things for the risk group. And they have been up until this week. I know. It's hard to keep up, when the market doesn't do what you think it's going to do. So that is another question of interest. What is going on with that? Why are people buying bonds like crazy? The 10-year in particular, not so much the rest of them. It's really the 10-year. Why are people buying the 10-year like crazy? Well, because they got all this cash. This cash is still sitting on the sidelines. I'm going to be so interested to see if Kathy Wood brings up this Friday what she's seeing in terms of the cash on the sideline. We already had a record, a couple of months ago, there was already a record amount of cash on the sidelines, investable cash. And then we added to that by people withdrawing their money from these smaller regional banks. A lot of that money flowed into the bigger banks, but a lot of it didn't flow anywhere but into money markets and other situations, and apparently into bonds. The 10-year bond, again, I'm not an investment advisor. This is not investment advice. The 10-year bond looks to me right now to be a place where people are going for safety, where they can get 3.3% as of today, which is the lowest it's been in months. But it's still 3.3, which is better than they get it in other places on the long term. So they get this 3.3% return on their money. And if the interest rates go down, which is certainly how things are looking in the future, as interest rates go down, then the underlying value of the bond goes up. And so you can make money on that side eventually at some point in the future, a year from now, 2 years from now, 3 years from now. It's kind of like playing a leap option, a long-term option where you have years, or a year or 2 years, in order to make your option numbers look right and make your profit. With the 10-year bond, you got 10 years where you can get that 3.3%, and anywhere along there, the bond's value might go up by 10, 20, 30, 40, 50%, maybe more. So it's kind of like a long-term option in that regard. So I think that's what's going on, why the 10-year is getting so much activity. Does that mean we're headed for a recession because of this inversion with the 2-month and the 2-year? Normally that's evidence of a recession, and maybe we're going into a recession. But I think it's more about how much cash on the sidelines is looking for a good deal, and maybe people are seeing that as a good deal. All right. Unfortunately, Tesla gets scooped up into this entire hot mess, and I'm going to do an entire video on Tesla's current stock price craziness. I think that's going to be on Saturday morning. I think that's when I'm going to publish it. And I'm going to go into the details of all the reasons why maybe Tesla is correctly valued in this range of 180 to 220 right now. That might be the right value in this market. Maybe. We'll talk about that. We'll talk about some other things about what will kick it out of that range. We'll talk about how people are seeing it, how the market's perceiving Tesla. All that'll be in that video coming up on Saturday. Another thing that's probably affecting the market today, I think might have been more important than the jobs numbers, might have been the Foxconn report. And they indicated some softness in Apple smart devices, and also some softness in overall smart devices. Once again, this would suggest that consumers are starting to, get a little bit tight in terms of their spending. Now, some people will say, well, they're getting tight for their spend. Normally, in a normal situation, people will say they're getting tight because they're afraid of losing their job, or they're afraid that they won't get as many hours, or they won't get as much overtime or as big a bonus, or, that their income is suffering. I'm going to say that this time it's because the consumer has overspent. And they might be given a pass because they had all this money coming in from the federal government, state governments, all this free money coming in, and they got in the habit of spending this money. And now they don't have it anymore. And so they're putting a lot of their surprise bills from the natural gas folks, some from the oil folks. They're paying more for their utilities, and they're paying a lot more for food. And because they're spending all of this additional money that they didn't expect to, this is messing up their budget, and they're putting it on their credit cards. So and the credit card usage is way up, savings are down. So I believe that's why people are tending to pull back a little bit on their spending. They just don't have a lot of money left at the end of the month to be putting into fund purchases. All right. So that's my truth bomb for today. Okay, let's go on to reasons why Tesla was down today. Well, according to the pundits, not me, but the other pundits, everybody's still taking a breather from Tesla's big run-up. That's number one. Number two, they're still getting hammered for their delivery mess. Their delivery mess. Yeah. What delivery miss? They didn't have a delivery miss. Anyway, So that's another reason. And then, oh yeah, and Elon said some things over the last couple of days on Twitter. The people are saying, oh my gosh, he's, put his MAGA hat back on again. Well, he's nowhere close to being MAGA, but yes, these comments, a lot of them were tending towards being more conservative than progressive. So are those causing the stock to go down? I think not. Okay. Here's what I think, and this is a little hint about what I'll talk about on Saturday. Tesla has to prove itself every single quarter from now on. From now on, there's never going to be a time. Tesla is a unique stock in history. They will always have to prove themselves. So right now, the average person on the street is saying, well, they'd had a miss, or they were just close, or whatever to their numbers. They're just not doing it like they were. Their margins are going to come in at under 20%. Their average cost of sale is going to come in at under the promised 47,000. I believe that, by the way. I'm estimating 44,000. But if it comes in at 47,000, oh my gosh, we'll look at that more carefully as the week progresses. By the way, I did a big video on this the other day in terms of what I think the margins are going to be, and what I think the 44,000, why I think that's going to be the number. That video was one of the most popular I've ever done. You might want to go back and take a look at that. So anyway, the street has never seen another stock like Tesla. It does have a high PE, and so they're going to have to prove it all the time. They're going to have to prove it on April 19th. They're going to have to show that the margins are there. They're going to have to show that the growth will continue. And then even after that happens, which I think will drive the stock up to 300 sometime later in April or in May, I think the stock will move up towards 300. The reality is that then the stock market's going to go, yeah, but can they still sell those 90,000 more vehicles that they're building in this second quarter? They're going to build 70, 80, 90, 100,000 more vehicles in the second quarter than they did in the first. Can they move that metal through the system? That's going to be the big question that the street is going to want to know, even if they prove that their margins were fine, and that you get my drift. I don't have to explain it anymore. All right. Yes, some of those issues are real, but there's all kinds of good news coming in that would suggest that for those who are willing to take a little more risk than the average, there's plenty of good news. The production quantities are going up, as I just mentioned, unless they absolutely don't continue to put in the extra shifts and the other things they need to do. The only way that they don't sell 2.2 million vehicles this year, and probably 2.3, is if they start cutting back on production. They would have to literally say, whoops, we're overproducing. And by the way, there was an article out this morning suggesting that the car companies are overproducing. That could have been a factor. So they're going to have to prove that they're not cutting shifts. If they start cutting shifts, cutting production, you start seeing less coming out of Shanghai, less coming out of Austin, less coming out of Berlin. If you start seeing the actual numbers below what those factories are capable of, that would be some evidence that the street would pay attention to on the negative side. But they're only going to pay attention on the positive side once a quarter when you get the total numbers, and once a quarter when you get the earnings. So that's what's going to happen. I think the narrative should now be that Tesla is a blue chip stock with a massive uptick in potential, like the 10-year bond. I think it's very similar to the 10-year bond in terms of people should be taking some of that kind of money and putting into Tesla, because it's a safe blue chip now, but the potential is massive. The other side of that, the flip side of that, we'll talk about more on Saturday, is that it is still 4 times whatever's happening in the market. If the market's up 1, Tesla's up 4. If the market's down 1, Tesla's down. If it's down 1, Tesla's down 4. If it's up 1, Tesla's up 4. So as long as that's happening, that's another aspect that these folks are looking at in making their decisions. So that's my call for the stock market today. What's going to happen the rest of the week? Yeah, I think I think unless there's a really big piece of news that comes out of left field, then it's going to be, flattish until Friday when those labor numbers come out, and that will probably have a pretty significant effect on the market one way or the other. And at this point, we can't even be sure which kind of numbers will affect the stock market in which direction, because it all just changed this week. That's about all I got for you today, and look forward to talking to you tomorrow and Thursday, and tomorrow's Thursday, and Friday and Saturday, etc. This has been Randy Kirk, and it's great talking to you.